Greetings to everyone. Hope we are all fine. All right, so I told maybe I here again. If this is the first time coming across my video, kindly give me a like and subscribe to my channel. All right, so today we're talking about value added tax, which is an indirect tax, right? So we will be moving on to lesson 10 of the principles and practice of taxation. So the overview of our main topic, or the reason why we are treating this topic, is to get the VAT payable, right? So if someone is registered under the VAT, how much is the person supposed to pay to the GRA, right? So you will come across something like input VAT, you'll come across something like output VAT, and then we will also try our possible best to deal with the VAT payable. So the VAT payable is basically the output VAT minus the input VAT, then we get our VAT payable. And how to compute for the input and output VAT will be treated in this video. In summary, to compute for output VAT, you have to multiply the VAT rate by sales. And if you want to get input VAT, you have to multiply the VAT rate by the purchase value, right? So if you are selling something at, let's say, 50,000, you have to factor in your NHIL fund, your get fund levy, and the like before you compute and then get your taxable output, right? So once you get your taxable output, that's when you compute your VAT on it. We are going to do some cases about this very soon. All right, so now at the end of this session, we should be able to trace the history of VAT in Ghana, explain the concept of VAT, discuss when a person becomes a taxable person, outline the types of VAT in Ghana, and then outline the exempt taxable persons, also account for VAT transactions, including those with withholding tax and discount. The key topics to be covered in this session are as follows: value added tax and taxable goods. There's some reading lists you can go through. So now we start with value added tax. So I remember during class, our lecture gave some nice scenario where when value added taxes was being introduced, right? And the likes of Akufo-Addo, his former president, His Excellency Donald Akufo-Addo, and his friends were disputing it and the like. I don't have the luxury of time to talk about this issue, so let me just go straight to the point. The value-added tax is heavily used in developing countries, and it also generates high tax revenue. It leads to frequent changes in tax laws. So basically, since developing countries doesn't really have a good taxing system, like they cannot really trace direct taxes. So we mostly use indirect taxes because for that one, it has been embedded in the goods and services we buy or we use. So it is automatic and it also generates high revenue because everyone pays it. And it is what? It leads to frequent changes in tax laws. When the taxman wants to increase the revenue he gets from taxes, one of his main targets is the value added tax because he will change that one, he will increase it to make it fit his budget, his or her budget. Right. So this is some of the history of VAT. So this is just a brief history. You can go on the net and then also look for more history about VAT in Ghana. So value added tax, which is VAT, was introduced in Ghana as an integral part of the tax reform program initiated by the government in 1983. It was designed primarily to address the effect of sales and service tax that it replaced. So the VAT service was brought into being with the introduction of short-lived 1995 VAT under the VAT Act 1994, Act 846, which was promulgated in December 1994. It became operational on March 1st, 1995, following implementation problems. This was when Ecuador and his friends were, what I say, it was repealed and replaced by the defective sales and sales service tax it had replaced within 3.5 months of its inception. So as a consequence, the VAT service was contracted into a much smaller VAT project for the purpose of planning and implementing. The reintroduction of the repackaged tax. So for the purpose of its administration, a new VAT law was passed in March 1998 when I was born. Okay, no, maybe it was 1st March. I was born on 20th. In 1998. On the basis of which a vigorous public education campaign was mounted to herald the advent of the new tax. So effective collection started on 30th December 1998. So even though it was introduced or it was administered in March 1998, the effective collection started on 30th December 1998. VAT implementation appears to have smooth so far, probably due to adequate preparation prior to implementation and the fact that useful lessons might have been learned from the previous attempt. So certainly, there are no doubts a few issues relating to implementation which needs to be addressed by the tax authorities, the registered persons, and the customers who actually pay the tax. VAT service, now known as Domestic Division of Ghana Revenue Authority, is responsible for the following indirect taxes in Ghana. So they are responsible for value added tax, they are responsible for NHI, National Health Insurance Levy. They are also responsible for communication service tax. So the service is the body required to enforce the following laws. So they are required to enforce the Value Added Tax Act 1998, Act 504, 546, Value Added Tax Regulation 1998, LI 1646, Value Added Tax 2013, Act 870, or the amendments. Also, the National Health Insurance Act 2003, Act 650, then Communication Service Tax 2, Act 2008, Act 754. So now we are coming to deal with these tax one by one. So now we start with valued added tax. So valued added tax, it is called goods and service tax in some countries, GST. So if you know something small about tally, you are going to use tally. You have to download the GST plug. Be able to. That was then, but now I'm sure it is automatic. So it is taxed on value addition in the production and the distribution chain. VAT affects only the final consumer or a non-taxable person, hence known as consumption-based. It is regulated by the Value Added Tax Act 2013, Act 870 as amended. So the current VAT rate is 15%, but collection includes the National Health Insurance Levy 2.5%, the Get Fund Levy 2.5%, the COVID-19 levy 1%, hence making everything 21%. But our TA told us that for the purpose of exams, as at now, we should be using the old tax rate, which was the 12.5%. That's what he told us. And I'll confirm again before I come into the tutorial session on this. So we said for the purpose of exams, we should be using the 12.5% VAT rate. This is because the 15% VAT rate was just amended in 1st January 2013. And we are currently in February 2025. It was amended. This was amended in 2023, sorry. And currently we are in 2025. We got to look into that. All right. So let's move on to the imposition of VAT. Right. The value added tax must be imposed and charged on every supply of goods and services made in Ghana. So every supply of goods and services that has been made in Ghana is supposed to be what? VAT added. Every importation of goods and services, so when you import any goods in Ghana, you have to add VAT to it. Then supply of any imported service other than exempt goods and services. So when we supply any imported goods, right, we are supposed to what? Add VAT to it. So the persons that are liable for this, right, except otherwise provided, the tax must be paid, right? In the case of a taxable supply by the taxable person making the supply, and in the case of imported goods by the importer, in the case of imported service by the receiver of service, right? This is straightforward. So, rates of tax, right? Ghana operates a multiple VAT rate scheme, namely the standard rate scheme at 15% and also flat rate scheme at 30%. Sorry. So you see, the tax man is always smart. The thing was at 12.5%, and then they said that they had increased the National Health Insurance Levy and the Get Fund Levy to be embedded into it. They've included it, they've increased, but it was embedded in it, right? And now they've divided it into two again, and now they've increased the VAT. It's more or less like Ghana. Me, for example, the way I'm a Banku lover, when they are coming to, when they want to increase the price of Banku, this is the same way they do. What they will do is that they will tell you that the Banku, for example, initially 2 CD and 5 CD, right? Initially 2 CD was a bit big, and then they will introduce a 5 CD one, which is bigger. Right? As time goes on, you see that the 2 CDs Banku is no more in existence, and the 5 CD Banku is now looking like the 2 CD Banku. That's the same thing the tax man also did here, right? So the 15% is applied to manufacturers and service provided, whilst the 3% is applied to wholesalers and retailers of goods. So now let's look at taxable activity. So for the purpose of this act, taxable activity means an activity which is carried on by a person, which is in the country, the person is in the country or partly in the country, whether or not for a pecuniary profit like small profit, or that involves or is intended to involve in whole or in part the supply of goods and services to another person for consideration. So whether you are in the country or you are partly in the country where you are intended to supply goods or services to another person for consideration, you are supposed to, like that activity is a taxable activity. So without limiting subsection, a taxable activity includes an activity of a local authority or unincorporated association or body in that involves in whole or in part the supply of goods or services to another person for consideration, and also the processing of data or supply of information or similar service, the supply of staff, the making of gifts or loan of goods, the leasing or letting of goods on hire, the appropriation of goods or service for personal use or consumption by taxable person or by any other person, the sale, transfer, assignment, or licensing of patents, copyright, trademark, computer, software, and other proprietary information, and the export of non-traditional goods or non-traditional products. So now let's look at goods and services defined, right? So now supply of goods and services, right? A supply of goods and goods means any arrangement under which the owner of the goods parts with or will part with the possession of the goods. So you are giving the good out, you are selling it, yeah, it can be in the form of sales, barter, lease, transfer, exchange, gift, or similar disposition, right? So anything that will let the goods be out of your possession, but there is a supply of goods. Then the supply of service means any supply which is not a supply of goods or money, and it includes performance of service for another person, the making of available of any facility or advantage, and also tolerating any situation or retraining from the doing of any activity. So the types of supply we have here is exempt supply and exempt import, and zero rated supply, and also relief supply, and then we have taxable supply. So So now we were told to read on make supply, special supply, and supply by agent or auctioneer. So basically, make supply is more or less like goods or services that are produced together. So um, maybe how do I even say this? Any goods or services that are produced together. Let's say you cannot supply maybe let's say a phone firm, for example, cannot just supply a phone, but it's with a battery, right? So it's more or less like supplying items that are of uh, composite, like they are combined together. But then the special supply is a specific type of supply that are treated differently, like they are treated special, right? Maybe because they are some, so we have the zero rated supply in there and the like. And then the supply by agents or auctioneer is where goods are supplied by an intermediary. Someone is within the distance, and the main person is then someone, the intermediary is supplying the goods. So now let's look at exempt supply, zero rated supply, and relief supply one by one. So exempt supply. So exempt supply includes medical service and essential drugs approved by the Ministry of Health, right? So these are supplies that do not attract VAT. So there's no VAT on those kind of supplies. Then we also have mosquito nets. We also have foodstuffs produced in Ghana and sold in their raw states. That's why the one that we import, it's not too Jimmy, too Jimmy produced in Ghana in its raw state does not attract VAT. So the price is significantly lower as compared to the rices, you see the rice. Those rice that were imported. So example, rice, millet, cassava, yam, guinea corn, plantain, vegetables, meat, and food. All right. That are produced in Ghana in their raw state. So it can be of the traditional form of smoking, which is drying, frying, cooling, do not affect the expression raw state. So unless maybe you are doing something like processing, that's when it affects the raw state. And drying, frying, cooling, and the likes do not affect the raw state of the food. Then also agriculture and fishing input specified in the law, right? And also education services approved by the Ministry of Education. Then transportation first, land or sea and air, but not spare parts. Then we also have petrol, diesel, and kerosene are all tax exempt. So let's move to taxable supply and value. So taxable supply. So except as otherwise provided, this is interesting. Except as otherwise provided in this act or regulations, a taxable supply is a supply of goods or services made by a taxable person for consideration, other than an exempt supply, in the course of or as part of taxable activity carried on by the taxable person. So if you want to determine the taxable supply, it is the taxable value, the value of taxable supply. So where the supply is for monetary consideration is the amount of consideration rate, the addition of all duties and taxes, excluding the tax, and where the supply is not for monetary consideration or is only partly for monetary consideration is the open market value of a similar supply, excluding tax. So now let's look at the time and place of supply. The time of supply helps in determination of the period of time that the tax on a particular transaction must be accounted for at the appropriate rate, and that period that a particular transaction is said to have taken place and therefore giving rise to tax due. The time at which a supply of goods and services is deemed to have taken place. That is where we say the time of supply, when the actual transaction took place. So now, the place of supply of goods is where the goods are delivered or made available, right? Where the goods are delivered. If the delivery or making available of the goods involves the goods being transported, a place where the goods are when the transportation commences, right? And also a supply of thermal or electrical energy, heating, gas, refrigeration, or air conditioning, or water takes place where the supply is received. So we're receiving light in our home or electricity power in our home. is where the place of supply. And then also a supply of service takes place at the location of the place of the business of the supplier from which the service are being supplied. So when you go to the barbering shop to barb your hair, the service has taken place at the barbering shop, right? The supply of the following services takes place where the recipient uses the service, including the assignment of a copyright, patent, license, trademark, or similar right, the service of a consultant, engineer, lawyer, architect, accountant, or other professionals. C, the processing of data or supplying information or any similar service. D, an advertising service. E, the obligation to refrain from pursuing or exercising taxable activity. Then the supply of personnel, the service of an agent in procuring for the principal, and then the leasing of tangible personal property other than transport property. Then now let's look at VAT registration. These are all laws, right, that you can read on again in the section 33, 42, and the like. Now let's look at VAT registration. The rules that cover them. So we have the qualification and threshold for VAT, the type of registration, and then when, let's say you are a registered person and you are a registered person, what happens for you to get the registration, right? So registration threshold, the VAT as amended states that a person with an annual turnover or an annual sales exceeding 200,000 is qualified to be registered. And then the person with a 3 months turnover exceeding 50,000 is also qualified, right? So you see, how many 3 months makes in a year? 4. So still on 50,000 times 4 should also still be exceeding this one. So you see, there's a slight difference between the second distance and the first distance. So let's take note. So where there is reasonable grounds to believe that a person's turnover would exceed 200,000 in a year, right? So types of registration, you have the normal registration where you go and register, compulsory registration where the GRA things that you are making, the domestic division of GRA, things that you are making enough sales to what? To be compulsory for you to get the registration done. And then when you and CASA, you go voluntarily to what? Register it. And also when a group tries to combine, maybe each person is not reaching that threshold, but groups come together and then reach that threshold and they go and register. And also we have the division or branch registration also. So certificates will be issued by the Commissioner General when they register, and then exhibit the certificate at a place or any other place of business. So cancellation of registration, where maybe you have been registered and you want to cancel your registration, right? So this is where the taxpayer no longer exists, right? It can be as a result of death or maybe the personal trauma or the like. No longer exists, then it's not carrying on a taxable activity anymore. Then it's not required or entitled to apply for registration, has no fixed place of business or abode. His business doesn't have a fixed place, or he doesn't stay at a fixed place. then has not kept proper accounting records related to a business. So let's say you've applied to register, right? And when they check, you have to have a proper books of records, all your sales, all your purchases, and the like. But in case you don't have a proper record of it, then your this thing will be cancelled. Then has not submitted regular and reliable tax returns required under this act. So now let's look at the VAT amended. So the 2018 mid-year budget amended VAT rate of 15% to 12.5%. So in 2018 it was 15%, and then it was changed to 12.5%. Initially, the 15% was having NHIL and the Get Fund in it already. It was having them in it already, making it the 15%. But now they linked it, they divided it into two, they've divided it into two, where the VAT itself became 12.5%, and then now the NHIL levies and stuff were standing alone. Now we are currently back to 15% again, and the NHIL and stuff are still standing alone. So you see the strategy they normally use. So the 2023 budget amended that VAT of 12.5 to 15% with the NHIL and Get Fund and COVID levy remaining the same. These changes have implications on computation of VAT registered person, which is the value added tax is 15, but CA said in the case of exams, we should use 12.5%. So I'll reconfirm again before we start solving the tutorials on it. So National Health Insurance Levy 2.5%, Gets Fund is 2.5%, COVID levy is 1%. So, and this is likely to also change because COVID is no more. Maybe COVID levy will be scrapped off and the like. So a VAT flat rate scheme is applicable to a retailer or a wholesaler. Remember, we said this up there. A retailer or wholesaler of goods applies a marginal VAT rate of 3%, representing the net VAT payable on the value of taxable goods. So the net VAT payable for a retailer or a wholesaler is 3%. Keep this in mind. So VAT registered taxpayers cannot claim the NHIL and Get Fund charge on their purchase. So what this is trying to say is that if you're a registered VAT person, you see you have input and output VAT, which we'll discuss very soon, right? Your input VAT should only be the normal VAT, but you cannot claim your NHIL and Get Fund. No, you can't calculate it on it. But what you are going to do to get a taxable amount is to calculate only the normal VAT. So you also have goods charged at the VAT flat rate of 3% are not subjected to the NHIL and Get Fund. So the wholesaler charging the 3% is not to also charge NHIL and Get Fund again. So the levies are to be charged at every stage that a VAT standard rated supply is made by the VAT registered taxpayer. VAT registered persons are now to account for NHIL and Get Fund on imported services on monthly NHIL and Get Fund return. So items that attract zero rated of VAT also attract zero rates of Get Fund and NHIL levy. All right, so I didn't really talk about this one. So the exempt supply is a supply that is being exempt from VAT. Zero rated supply attracts zero rate VAT, and then relief supply is more or less like uh uh how do I even get it? How do I even say this right? It's like a relief, like it's being used to reduce the tax burden. And then a taxable supply is the kind of supply that is taxable. All right, so items that attract zero rates of VAT also attract zero rates of get fund and national insurance levy. So manufacturers and service provided are to account and pay for NHIL and get fund. The value of the supply, excluding the chargeable levies. So this is the base for charging the levies. So the value of the supply, excluding the chargeable levies and deductible VAT, and also all non-deductible levies and taxes should be factored into the cost building up. That is treated as cost to the base, to rates, to compute, and NHIL and get fund. So what they are trying to say here is that you have, let's say your, and then this cost, it is levies and tax incurred, can, however, be treated as deductible expense in the financial statement. So let's say you have 20,000, right, as your service that you've rendered. Now, what the taxman is saying is that, you see, you have to calculate, uh, I mean, so let's say you have 10,000, right? First, you have to calculate your COVID, sorry. First, you have to calculate your NHIL, which is 2.5%, right? 250. Then you calculate your get fund, which is also 2.5%. You get 250. Then you calculate your COVID levy, which is 1%, which is 100. Or you are going to get 10600, right? So now this is the 10600 is where you are going to apply the VAT of 15% on it. You get a VAT of 1590. You get the whole concept. That's what we are trying to understand here. So taxable value for charging VAT. So the taxable value for charging VAT are as follows. The base for charging VAT is the value of supply of goods and services, and it includes chargeable levies and excludes, sorry, includes the chargeable levies and excludes the deductible VAT. All levies that cannot be deductible should be factored into the cost building that is treated as cost and added to the base before computing VAT. That's what I just did few seconds ago. The 2.5% NHI or the 2.5% get fund and 1% profit should be computed on the value of the taxable supply, which includes all costs incurred except deductible. The 15% VAT shall be computed on the NHIL get fund and COVID levy charge on COVID levy charge inclusive value of the taxable supply. These costs or levies, these costs in bracket levies and taxes can be deductible expense in the financial statement. So now, if I said in the intro, I made mention that if we want to know our taxable, our payable, our tax payable, right, our VAT payable, then we have to know our output VAT and then our input VAT before we can do that. So that's what we are coming to do. So output VAT is taxed or is charged on taxable supplies. So you bought a goods, some goods, or you've manufactured some goods and you are trying to sell it out. That's the output VAT. That's where you are going to charge your output VAT. And the input is when you are purchasing it, right? VAT was being placed on it already. So you have to take that VAT out, right? So taxable, so input VAT is paid on the cost incurred on purchases. The deductibility of input VAT. To determine the tax payable on standard rated supplies, the input tax is deducted from the output tax. We'll do that very soon. The non-deductibility of input tax. Input taxes are not deductible under certain circumstances. So deductibility of input tax for mixed, taxable, and then exempt supply. So now let's look at this example. Miss Patapa commenced trading on December 1st, 2022. Has made the following sales. So from January to March, he made a constant sales of 29,500 per month. April to June, 12,200 per month. July to September, 21,500 per month. These figures are stated as exclusive of VAT. Miss Patapa's sales and purchases are taxable activities. Her markup is 25%. So here they are telling us to determine the total VAT payable for okay. So we should determine the total VAT payable if Ms. Patapa is registered under VAT flat rate scheme. And also we should what? The II is saying that what is VAT payable if Ms. Patapa. So we should determine what is the VAT payable if Ms. Patapa had registered for standard VAT and that Get Fund, NHIL, COVID levies are considered straight levies. So now, what we need to do is to now convert the sales because there will be a form of input and output in here, right? So what we are going to do is to convert the sales to purchases. Remember, they said the markup is 25%, right? So if you want to convert markup to margin, then this is what it is going to look like. So these figures you are seeing here was arrived at, since the markup is 25%, to be 100 over 125 times the sales. Right. So when you do that, you get the pitches. Right. So now, since it's only attracting a standard, uh, not a standard, uh, a VAT flat scheme, right? So we are going to calculate NHIL and get fund only on the uh, purchase amount. So get fund is 2.5 and 0.025 times. So if you want to get this flat rate, right, it's going to be the 2.5%, which is the get fund times the pitch is 23600. And we are going to get 590 for that. And then 2.5% for the NHIL times 23600, which is also equal to 590. So we add them, 590 plus 590, we are going to get the flat rate of 1180. You get it? Okay. So that is it for this side. That's the same way that was done for all the sales. So the from April also, which was 12,200, you are going to convert it to purchase and then also find the 2.5%, 2.5%, and then add them, and then you are going to get this. So this applies to all of the other calculations, right? Now, let's look at solution 2, where the VAT payable, where we have to calculate the VAT payable if she is registered for the standard VAT, right? If she's registered for the standard VAT, then what we are going to do, as already we've computed for the purchase, how we had the purchase, and then there is also the sales here, right? So the purchase amount will help us get our input VAT. Remember, I told you that for the input VAT, it has been embedded in here, but we are going to ignore the COVID and the other stuffs if there's an input VAT. So we are going to ignore COVID and NHI when there's an input VAT. So this input VAT is going to be this input VAT here. This input VAT here. Because they are using the current tax rate of 15%. So it is going to be 15% times the purchase. Right, the slide is being based on the current listing, but our TA told us that in the case of exams, we have to use 12.5, and I'll reconfirm again before I'll start the tutorials on it. So when we do 15% times the input, we are going to get this. Times the purchases, we are going to get the input VAT. So same applies to all of them. So for the output VAT, what we have to do is our sales figure is there, right? Our sales figure is there with the markup. Now, what we are going to do is we are going to bring in our NHIL, so 2.5%, So now we calculate 2.5% on the sales, right? Then we calculate 2.5% on the sales again. So the first one is for NHIL, the second one is for Get Fund. Then we calculate 1% for COVID. Right. So when you calculate 2.5% for NHIL, you are going to get 737.5, which is approximately 738. And when you calculate 2.5% for NHIL, they Get Fund, you get the same thing. And then 1% for COVID, you are going to get this. So when you add the sales plus the NHIL plus the Get Fund levy plus the COVID levy, you are going to get your taxable output, right? Your taxable amount. So now, when you calculate the VAT rate of 15% on the taxable times the taxable 31270, you are going to get your output VAT. Now, if you want to get your payable, is your output minus the input. So output minus input equal to payable. Right. So that is basically it. This looks easy. Just note that if you want to calculate output VAT, it's your sales plus your NHIL plus COVID fund plus Get Fund plus COVID levy before you apply the VAT. But for purchases, you are not going to apply any NHIL or Get Fund or whatever on it. You are just going to apply the tax rate on the purchase amount. That's why you are getting this year. So in all, when we subtract, this is what we will be paying, this is what you will be paying, paying. So when you do the same thing for all of them, that's what you are going to get. All right, let's move on. Time is far gone. So when should VAT be paid? So VAT is chargeable and payable to GRA at the earliest of the following. The goods are removed from the premise. When the goods are removed from the premise of the taxable person or from other premise where the goods are under the taxable person's control. The goods are made available to the person to whom they are supplied. Then the performance of service is completed. When the performance of service is completed, then receipt of payment is made, and then when a tax invoice or sales receipt is issued. VAT return. So form report must be submitted for each month by the last working day of the preceding month. So when you fail to submit a return, it attracts a fine of 500 cedis and 10 daily. So it depends on the type of business. All right, so this is what we looked up in this session. Note that even though the reading aspect is also important, what I normally see in the exams is the calculation aspect. So know when to compute inputs and output VAT. It's very, very important. We will solve a tutorial session on it and you'll get more understanding. All right, thank you very much for your time. Don't forget to like this video and also subscribe to the channel. See you some other time. And these are some uh, exercises. You can take them by me, you can do them by yourself. And note that, for example, this is an example of in the year 2017. So in the year 2017, there was no COVID, right? So in solving for this, no COVID will be included in the in as a levy, right? And also, you can also try this out All right. So, uh, thanks for your time, and then see you some other time. Bye.